Hello traders, Gary Wagner here, approximately 10:30 in Honolulu, 4:30 in New York on Wednesday, the 17th day of June 2015, and this is Trending Markets. We're looking at this today as really part two. We started with the gold forecast, and I want to carry over the discussions we've been having about the recently concluded FOMC meeting along with the press conference that really is about an hour old at this point. We saw a really strong move to the upside in the precious metals in reaction to the fact that we're not getting immediate rate hikes. However, it's been made clear that we should in fact see rate hikes this year, and I believe they'll come as early as September. Stock market reacting favorably to the fact that there's still some time left on the clock, but when you look at the sand, so to speak, coming through the sand clock, so to speak, we see very little sand left in the top. It's almost empty there. And a couple of things that we really found fairly profound, and most importantly, was a renewed confidence in the economic recovery that we've seen, and really her statement that a decision to raise the rates really signals the economic recovery we've been waiting for, and this has really taken us from the past difficult climate into an area in which we're seeing great progress. S&P's trading up, now currently trading off a little bit, so we will see the market close today down slightly, in essence unchanged on the day. Now, although the Standard & Poor's 500 as closed slightly unchanged on the day, Dow Jones Industrial Average did manage to close on a positive note, up about 31 points, 17,935 and change. And so the real question we'll want to see as this plays out over the next couple of days is what effect recent statements made by Yellen are going to have on the equities markets themselves. She said that she's very aware that by actually going in and making the decision to raise rates, that this could have an effect and an increased amount of volatility in the markets, and that they would do their best to alleviate what she called needless volatility within the market as rates are risen. She also said that there are some significant factors that higher rates are actually going to have on the economy. And most importantly was her statement that a decision to raise rates signifies economic recovery from a past difficult climate, and shows that the U.S. recovery from this crisis is signaling great progress. NASDAQ also closed up slightly, so in essence we had S&P slightly lower, Dow Jones, NASDAQ a little bit higher on the day. As I said, I think that we'll see how these latest statements filter into this market throughout the remainder of the week. Now, as far as the currencies are faring, interestingly enough, Yellen did touch upon her feeling about the dollar. She said that in terms of the dollar, we're still seeing an increase in value. The higher dollar as it relates to the basket of currencies is having a negative effect on exports. And she also said that the dollar should continue to be stronger for a while. When pressed about a target for the dollar, where she thinks they would like to see it go, she goes that there's no target for the dollar, but it is a factor in evaluation of other markets. Now, when we look at the activity today, we do have the dollar under tremendous pressure in the markets. We didn't get a rate hike. Of course, that would have sent these markets substantially higher. We have the dollar currently trading off about 68 points at 94.31, and the euro dollar itself has shown some tremendous strength, and in fact is currently trading at about 113.30. We talked about a high-risk trade the other day. For those that took it, you're in at about 112.50. It is running against you. Stops are sitting at around 114. And I want to give you my current take on the euro as we see it now. When we look first at our daily charts, and that's what I have up with our current Elliott wave count, the basic assumption that I was looking at, and I did label it as a high-risk trade, was that we're absolutely in a bear count. We've watched it come down from about 140. We terminate wave 3 at these lows. This is at around 105. You get a secondary bottom here. From there, you go into a corrective wave. And my basic assumption is that we are now in a impulse wave bear count, which should take prices lower. However, those lower prices might take a little while to unfold. When we take a look at our MACD as well as our stochastics, we are going into overbought territory, but not quite there. On our daily charts, we have absolutely hit our first target, which was right here, and that is one of the key factors that I looked at in terms of actually implementing this strategy. But when we take a look at our much shorter term charts, you can see that as we go into this fifth wave, that fifth wave is going to be composed of a 5 count of sorts. And so if we look at this as a 1, a 2, whether or not 2, that counter wave has terminated, how high it will go, that's the really friction that we have to weather, because following this, I believe we will go into that third wave in the euro, meaning we'll see the dollar begin to strengthen again, we'll see the euro weaken. That is not happening as we speak today. Traders that took that call, maintain the current position, maintain your stop, and cautiously we're looking to see where this recent rally will run out of steam and really terminate or wash out. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for another Trending Markets. Bye-bye.